Thank you everyone for being here in this TradeStation webinar. Today we're going to do a futures options presentation. And I'm not sure if you're aware of our options replay, but we do an options replay on equity options. And today is the first instance of futures options replay. So it's a very similar format of options replay. We talk about practical trades and the reasons why a trade may work or may not work. So we look at the scenario that actually led us to that trade and the reasons why it may be a trading opportunity and some of the metrics around how the trade performed. My name is Jesus Nava. For those that don't know me, I am the Director of Client Training and Education for TradeStation Securities. As you can see, I'm joined by my colleague, Brandon Wendell. We'll pass the microphone over to him in just a moment. I just have to go through some of the introductions and the disclosures. Keep in mind that every symbol and idea that we talk about is for educational purposes only, that these are not, recommendations of TradeStation. Also, active trading is not suitable for everyone, especially when it comes to trading options, which carry a high degree of risk. Also, past historical performance is no indication of future results. We are going to take a look at examples. And of course, we just want everyone aware that that is not a guarantee of future results. If anybody needs additional information on these disclosures, go to www.tradestation.com/important information. Another thing that I wanted to point out is that even though it's great to have Brandon here, he's not affiliated with TradeStation. He's our guest speaker today, and his opinions and ideas are his own. But let's go ahead and get started here. One thing that I want to note and show you everyone here on the screen is our Options Education Center, because we are going to create something very similar for futures. So the same way that you can go here to learn on tradestation.com and see options education, we are going to very soon have a futures education section where we are going to host all our futures education material in addition to futures options. So today is all about futures options. So I want to welcome everyone. Thank you for taking time out of your schedules to be here, and hopefully the presentation will provide you some ideas that you can implement in your own trading. All right, I'm going to stop my share and pass the microphone over to Brandon. Brandon, the floor is all yours. Thank you for being here.
All right, thank you very much, Jesus. Thank you for having me back again. Welcome, everyone. Got my screen sharing going on here with you guys, so we'll go ahead and kick this off. And let me just make sure I can see the chat. So basically, if you're not familiar with me, I'm a contractor. I work independently, and basically I'm a charter market technician. So I've got kind of a master's degree in technical analysis. I've been involved in the markets for about 30 years. Started off as a retail broker, which I hated. It's basically a sales position. Kind of moved into back office operations, where I learned more about how the markets move and actually traded the market. So that was a lot of fun. Parlayed that into a career as a hedge fund trader for a little bit of time. Kind of burnt out on that because it was a high stress, high intense environment. And it was fun, but I was basically trading 50 million AUM, where I was able to have full discretion of how the money was being traded, as long as I was profitable, and in certain markets with risk management in place, of course. Ended up going into education after I left the hedge fund. I started trading for myself and kind of struggled a little bit, to be honest with you. And part of the reason why is that I had gone through some education, but then I left and was on my own. And I found that the markets are a living animal that you need to learn and adapt with on a regular basis. And one of the best ways of learning from the markets is from learning with other people and having a mentor. So I latched onto a mentor who worked with me for a bit, and eventually I was able to become a mentor to others once I was successful in my own personal trading. So anyway, enough about me. I don't want to talk too much about it, but I'm here to kind of share my experiences with you and knowledge to help you in futures options. So we've been doing the options replay with equity options and also index options that we've talked about in the past. And you'll notice on my screen right now, I am looking at futures options, completely different animal, but in a way, kind of similar. So options are options. I mean, when it comes down to it, we are looking at contracts, puts and calls. We can either buy them or sell them. The difference here is that these are derivatives of derivatives. What? Well, basically, an option is a derivative because it derives its value from the underlying asset. Futures are also a derivative. They derive their value from an underlying asset. For instance, the NASDAQ futures that I'm showing a chart of right now, you can see that we had a nice big green candle day today, big bullish move to the upside, still in a downward trend altogether, but nice little correction. Anyway, this is based on the underlying NASDAQ. Okay, this is a futures contract, meaning you have the right to get a hold of something or sell something in the future. Now, because it's an index option, and I'm not going to go through all the details of this because we actually did do some previous workshops on options on futures in the Options Education Center, I believe. You'll be able to find some of that information. So, this is what we call cash settled when it comes to the NASDAQ, because if you trade the NASDAQ futures, which is what we're looking at as the futures contract, you cannot take possession of the NASDAQ 100. There's nothing to take a possession of. It's an index. So it's basically an average based on a weighted value of multiple securities, in this case, 100. If I were to click over to the ES futures, which I have here, it'll populate. There we go, pretty quick. This is the daily chart of the ES. Same thing. That is 500 stocks, but it's an average of those 500 stocks, a weighted average. So when we trade those options, we're basically saying, okay, well, actually, let's go back here. And right there, I have an options chain. Let's see, what do I have the options chain open on right now? We've got, yep, the ES. So I'll enlarge, and we're looking at the current contract. One of the things you have to be careful of when you're dealing with options on futures, and I can zoom in a little bit for you too. Basically, what happens, didn't mean to do that. Basically, we have two expiration dates to deal with. And let me see, can I get that out of the custom? There we go. You can see we've got June, September, March, or I'm sorry, December, March. And then it also shows you right here, June, September, December, March. We have two expirations. We have the expiration of the futures contract, and we have the expiration of the options on those futures. For sometimes they're the same. June is June. It shows you it's the underlying securities. Again, let me zoom in. The underlying security for the June futures is June 2025 as ES, and so on. The September's is September's. But that's not always the case. That's the problem. This is linked to, okay, never mind. Anyway, if we go here, this is corn. And actually, yeah, here you can see the May contract is attached to the May futures for corn. The June contracts for options, this is the option chain for June 2025. It is actually tied to the July 2025 futures contract. So if you're familiar with this platform, what I'm using is TradeStation FuturesPlus, and you have to make sure that I use by the way, the new options chain. There is an old one. The new one allows you to look at the entire series all at once. The old one, you have to look at individual months at once. It's a personal preference. They both work fine. So if I'm trading corn futures and corn options on futures, perhaps right now I want to trade the May contracts. They are going to be on the May future expiration for corn. However, the June contracts and July contracts, they have either 61 days. Again, let's see if I can zoom in. You know what? Hold on. I want to fix something here. There we go. Perfect. Let's try that. Nope, still doing that spread custom. It's trying to get that to not appear. You know what it is? It's the control key. That's why. There we go. Now I figured out how to get rid of it. That's what I wanted to show you. Right there, you see June 2025. It shows 61 days left till expiration for the option. But if you look, it says ZC July 25 on the right. That's the June contracts for the options are being traded on the underlying July corn futures. The July options that have 89 days left till expiration are also being traded on the July futures. So just be careful when you're trading those, you understand what is the underlying security that you're actually trading on. Anyway, going back to my charts and what I've got going open right now, I actually put on a few simulated positions in the past year, and I want to kind of go over some of that, the reasons why and what's going on with them right now. For the most part, the strategies that you employ in options on equities and options on ETFs and indexes will apply to the options on futures. They're very, very similar. Options are options. You have calls and puts, as I said before. Yeah, this is FuturesPlus that I'm using, which is a web-based platform, and you have to have your account set up for futures and FuturesPlus specifically. Let me enlarge the font here as well so we can actually see. It's a pretty easy program to get used to once you play around with it. There's also the support and help you can get to as well. So anyway, here's my open position box. Let me go ahead and zoom up there. And you'll see I actually have options open right now on the S&P 500. I actually have a couple different positions. Unfortunately, in the simulated mode, I'm not able to see some of the past executions of my orders for some reason. And I forgot to write down when I actually got into those. This is showing me the ones I was just playing with today for fun. I got in and out of a particular position. So it shows me the order numbers and all the information. But I was trying to find some of the past ones, and there is probably a widget. That's what these are called, widgets, these little tools all around. There's probably a widget for it, but I'm just not familiar with it as of right now. And I will have that for you by next time. Because again, you can go ahead and look at some details or orders on individual dates if you know when you actually placed those orders. So you can see that today's date, I've got a couple of orders I placed. Anyway, irregardless of that, basically what I was looking at for our first opportunity was a non-directional opportunity. Although today we can also take a look at directional opportunities. And you'll see, actually, I am in simulation mode. Yes. If you log in to Futures Plus, okay, and you'll do that through the hub. Mine's not set up for some reason right now, but usually when you go log into your hub for the customer hub, you'll see Futures Plus once you have your contract or your account enabled for that. And you'll be able to click there. So you log in first, then it'll open up a separate browser for your traders Futures Plus. But right here under edit, you change the environment. You'll see there's a little yellow dot that pops up and you'll see the yellow bar. That's how I know I'm in simulated mode. And under live, obviously, that would be in live mode, which I can go into right now to show you things, but I can't actually place any trades because it's not enabled for that right now. I just have a simulated account here. My live account is not set up right now. I do have a live account, but I trade other options on that right now. Anyway, but that's where you can switch. Once you log in, and again, you would go into TradeStation.com. There we are. Anyway, you would just go into sign in, and I'm actually logged into my personal account. And what'll happen is when you go to your account, like I said, it's not hooked up right now, so it says open a futures options account. But once you actually have Futures Plus, just like here, it says download or launch, you'll see launch inside the hub. So that's how you get into it. And then once you're in, like I said, if you want to change your environment, because it may put you in live immediately, make sure you see the yellow if you want simulated. You just go to where it says live or simulation and click on it and it'll upload that version. Okay. To get other tools, you go to widgets. So there's plenty of videos. I don't want to spend too much time on that because there are plenty of videos on how to use Futures Plus. Okay, there's the Getting Started series that Jesus has put together. You can also email education@tradestation.com to get more information about where those are if you have any questions. But basically, what I did last week, I believe it was, I was looking at the markets, and this is a daily chart of the ES, and we're stuck in a bit of a range, as you can see, right? We're going sideways, and we've been going sideways for a couple weeks here. And I figured that, we're still going to be going a bit sideways. We may try to break out, but I kind of figured unless something fundamentally changes in these markets very soon, there's the saying, sell in May and go away. We're kind of getting out of the earnings season. Well, I mean, there's going to be the first quarter in April, but for the most part, until the earnings start running through again, I figure we're probably going to go a little sideways here in the markets with every once in a while, a little bit of a jump up and down, perhaps. Okay. If you're on the desktop, that's not where you want to be in order to get into this version. Like I said, you have to go tradestation.com, log into the hub or the sign in, the login for clients. That's the hub you'll go into, and then you click on the Futures Plus. But you have to have it enabled first. If you haven't contacted TradeStation and got it enabled, you won't be able to go in yet. Okay. And if you want to trade options on futures, you got to use this. You can't use the desktop. It doesn't work. Anyway, getting to my platform, as I said before, I went into this and I was looking at the charts. And in my drawing tools here, I'll go down to array. And it's a little bit different than what we have with TradeStation. The desktop, I love it. And I missed some of the features because this is not the same platform, but it is very, very good as well. And the main thing is I can still chart futures, the underlying securities on the TradeStation desktop or even the web version, and then execute the orders here. So if you're used to the charting, then yeah, use whatever you're used to, right? So I don't have it open right now, but I'm not gonna spend the time opening it, but I can. I can open up the desktop and just use that or the web version, as I mentioned. So I'm going to focus a little bit more here on the strategy that I was looking at and why I was doing this. So this is what we call an area of supply. This is where we had some balance between buying and selling pressure, and then we had the origin of an imbalance that pushed prices down. And as I said before, we were pretty much caught in a sideways range. And the other part of the range, again, let me go to my drawing tools. There we go with the ray. And you can see the bottom of the range is around 5560. Meanwhile, the top of the range is just above 5800. One of the things that I like to do is make life a little bit easier, if at all possible. One of the hardest things is trying to figure out where the markets are going to go. An easier thing is figuring out where it's not likely to go. Higher probabilities. I think I mentioned this before in the options replay sessions that we did on equities, where basically I was talking about if you are buying options, you have a little bit of work to do. Well, the market has to work for you. You have to do the right analysis and identify where the markets are going to go. And if you buy options, you need prices to go far enough and fast enough. That way you profit without the options decaying too much. You have to overcome that time decay and volatility and a bunch of other things, the delta and whatnot, gamma. Here, if I sell an option, for instance, if I think prices are not likely to go above 5850 or not below 5560 or 5550, I think it was. Let me see. Yeah, I did 5550 and 5850. So basically, I was thinking we're not going to go above this level or down below this level. What could I do? Well, I could do two strategies, or one of three, really. Four, perhaps. I didn't do the fourth one. I probably should have done that one. We can put that together today. Okay. Couple different strategies we could do. Number one, again, let me go back to my drawing here. Text. Thought I had text right here. I forgot how to draw text on here. Annotation. There we go. We could do a bull put spread. Oh, that go? There we are. Do a bull put spread down below, or forgot it's under annotation, not text. See, like I said, it's a different program. You could do a bear call spread. Again, I forgot to click on it. Bear call spread, which is simply selling calls above or selling puts below with the anticipation that the options will expire worthless. Or I could combine the two. Doing both of those together is nothing more than an iron condor. Oh, I remember to click on it this time. The iron condor. Or if I'm willing to, and actually I didn't do this, but I can walk you through this today, and we can see how the results come out later. And by the way, this is not a recommendation, okay? I'm doing this in a simulated mode for certain reasons, obviously, because I can practice and walk you through this. And if you've not done these types of strategies or not used the platform, by all means, you should be using the simulated trading mode to practice this as well. But the last one is an iron butterfly. And the advantages of all of these strategies is if I'm right and prices stay anywhere within that range, that's a pretty big range, 5560 to 5850. We're talking almost 300 points. If the ES stays within that 300-point range by the expiration of the options, then I get to keep the premium that I sold those for. I can also close it out sooner if I choose to, and I could do that for either a win or a loss. So what I chose is basically the iron condor. And the reason why, and this is kind of neat, the bull put spread, you would sell a put, but so you're not naked on the put, you would buy a lower strike put, and that caps off your risk. So it limits the risk, but anytime I'm limiting my risk, I'm also going to limit my reward. And in this case, you'll see that I did, zoom in over here, there it is, the 5550 put. It's kind of hard to see this. There it is. Now I got my cursor. There's the 5550 put that I shorted. And then I bought the 5500 put. I know there's extra zeros there. You just got to ignore them, but it's 5500 and 5550. And you can see short and long. So I sell that put and I keep the premium if the prices stay below 5500 by the expiration. And I bought the put to cover myself. As a matter of fact, I'm actually in a profitable position right now if I wanted to get out. I don't even necessarily have to keep this till expiration. Looking at this, though, from the standpoint of when I got in, you can see we have it's called SOD price being shown right here. That's the start of day price. That was basically my cost to get in. And at the time, the 5550 was sold for $126.25. Now, that's not $126. That's 126 and a quarter points. So what we have to do when we're trading options is multiply whatever number you see there by the point value of the underlying security. So the underlying security is the ES, and that's a $50 per point. So I actually sold that. Let's see here. Do I have a calculator still open? Nope, I do now. So 126.25 times 50, I sold that for $6,300, 63,1250 if you want to be exact. And at the same time, again, so I'm not naked in the option, I also bought the 5,500 put right there for 113. Well, that reduced the amount that I collected. I didn't collect 6,300. Again, it was 126.50. Nope, sorry, 25 minus the 113 that I spent. That's only 1325 times 50. 662.50 is what I collected in premium total. Because I just take some of that $6,000 and buy the 5,500 to lock in my risk. My maximum risk is the difference between those two strikes, which is only 50 points, minus the premium I collected, which is 13 and a quarter points. Now, it sounds kind of weird when you think about it, because again, let me write this down so I don't forget. It was 662.50. Okay. That's how much I collected total. How much is my risk? Well, again, it's 50 minus 1325 times 50. I'm actually making $660, but I'm risking $1,837. Why would I want to do something like that? That doesn't make sense. I'm risking a lot more than what I would make, right? It's about probabilities. Okay, the probability is that I would make that profit is going to be much higher than if I were to go ahead and just try to buy a call and expect the markets to go up from that level. First of all, when I put in the trade, we were nowhere near 55.50. Okay, as a matter of fact, going back to our charts, like I said, I just did it last week. I just don't remember the exact date I put it on. It was either Thursday or Friday, maybe. It wasn't even that long ago. So we're sitting right here at about 57.50. We're over 200 points away from that area. So I was able to collect, and let's see where I am right now, as a matter of fact. First of all, if I was to buy a call and try to profit from prices moving up, I had no idea if prices were going to go up because we were moving overall sideways. Last week, when I looked at this, that's what we're looking like. That doesn't look very bullish to me. Doesn't look like we're going to be rallying up anytime quick, that soon. Even if we did, there are levels of supply overhead that are likely to push us back down. So is it likely we're going to drop below this level by the next week or so? Probably not. It could, by all means. But again, it's about I did some more analysis than this, but by putting together my analysis, I had a higher probability that I was going to go ahead and profit if the prices wouldn't drop below that level. And basically, prices could have gone sideways. They could have gone down a little bit, or they can go up as much as they want. Those puts would profit no matter what. As of right now, what is my total profit? Let's see here. Again, bring up my calculator. On the 50, there's 55.50s. I'm up 1781 and a quarter. But on the 5,500s, I'm down 1587.50. So right now I'm up almost $200 on the trade. I could close out that trade and minus commissions and maybe a little bit of slippage, I'll still make around $175, $180. Again, that's not a bad rate of return. What was my total risk? About 1,800, right? So let's say we get 175 divided by 1,800. That's almost a 10% rate of return in just less than a week. Basically, a little over the weekend. Pretty good return there, isn't it? And it was a high probability opportunity. Now, that wasn't the only thing I did. Okay. So, oh yeah. No, every contract is a little bit different. Yeah. So with futures, no, it's not $50 per contract. It's just on the ES, as Isabel mentioned. Yeah. It's depending on what it is you're trading. Okay. Dennis, I can't answer that question for you. I have to ask TradeStation, but I believe it's things of value, not necessarily cash. You have to have equity in your account. So I'm not sure, to be honest with you, but a lot of brokerages are a little bit different. And yes, as Isabel mentioned, all the futures are different. As a matter of fact, one of the tools you could use, I have it open right here, contract directory and calendar tool. Basically, if you go into the CME group, you have to create a free account to use these quick strike tools, but you can create that account. You click on the little person right there or go to log in and create an account. But if you do a search right there, you click on the little spyglass there and type in contract directory, you'll get to this page. So I mentioned the equity markets. I click on equities. There's again, I'll zoom in, ES, NQ, Russell 2000, mini Dow, and so on, the micros as well. So if I click on the NASDAQ, as Isabel mentioned, I can click on, let's see, let's go to June, our next expiration. There it is, NQM5 future, okay? And it shows me right here under UOM quantity, that's the point value. Or actually, even if you don't have an account and don't have this is more for the options play. If you just go to the CME Group website, you can go to contract specifications. So under markets, say I want to know the NASDAQ, oh, let's go to Euro. Let's say I want to know what the Euro point values are for the multiple. I go to specs, and under specs, contract specs, right there, 125,000 euro. So that's the point value. Every 1 point in the euro is 125,000 euro. Or if I wanted to trade, let's see, again, go back, corn, oops, markets on the homepage, and you can search, there's all products, but I can just simply go to corn, and again, click on contract specs. It's 5,000 bushels that we're trading. And right here, the minimum fluctuation is 12.50. That's 1/4 of a penny. So 1 penny or 1 point would be $50 again. So there's a couple different ways of looking up. Again, the simplest one is looking at contract specs here. There's some other places you can go as well. But yeah, they're all going to be different. And that's just a basic futures thing. If you don't know the point values of futures, don't try to trade the options on them first. Learn the futures themselves and then move on. Okay, this is a little more sophisticated. Not necessarily harder, it's just different. Okay, but yeah, it's not as easy as stocks where everything is 100 shares. You just multiply by 100. You got to multiply what the point value is for the underlying security. So the other side I mentioned was the calls, which is not doing quite as well, but it's still okay. And here's the reason why it's still okay. I mentioned that the top of the range is about 58.50. Well, where do we go today? You can see this is my zone. And if we do the bear call spread above, we would sell the 58.50s or above and then buy a higher strike call to cover that and lock in the amount of risk as well as the amount of maximum profit. So that's what happened. Have the calls. And again, let me zoom in so we can see this better. There we are. And it was the 58, I think it was a 58.50 call. Yeah, this right here. 58.50 call, short, okay, and that was sold for 112, again, multiplied by 50. And then the 5,900 call was purchased for 90.50. And you can see right now, that's actually in a losing position. It's not in the money though. It's just, and by the way, this has no intrinsic value yet because the underlying security is still under 58.50. We're at about 58.30 something. I didn't see where the actual settlement price was today. But overall, I sold and bought, and right now, negative few $100. Okay. But again, there's time to go still. And what'll happen is as time goes by, as long as prices do not go above that 58.50 strike that I sold, those options will decay in value and become cheaper to buy back. They really start to decay fast in the last 30 days until expiration. So if I really want to sell these, well, I don't have a choice. I have to choose whatever options are available, which is right now the June contracts, as you saw. But there may be other securities that I could do, such as crude oil, that have expirations much sooner. As a matter of fact, right here, I zoom in again. Let's get that out of the way. There we go. You can see that I have May with 24 days left until expiration. That is also being traded on the May futures contract. Okay. So if I want to have a faster decay, let me see, do I have the delta? No, I only have some of the Greeks in. Let's do this. First of all, limit the number of options we're seeing so we don't see too many. And then I have the June, again, 7. Why is it giving me too many? Hold on, acting up a little bit. Let's do 3, see how that works. 7 and 7, there we go, that's better. Basically, I can go in and edit the columns and add in theta. I'll add Vega for the heck of it and resize. And now what I can do is compare. Let's say we just look at the money options right here. Again, I'll zoom in and let me see, where's the column for theta on the far right? So we have 68. Let's compare those just for right now. There's the 68 and the theta is 36.48. That's because we only have 24 days left until expiration. That means every single day that's going to lose $36 in value. Well, if I sold options, that would be my profit. Okay, now I won't get 100% of that because I have to buy another option that offsets that. But we take a look at the 68 down here, which has 53 days left till expiration versus 24. Once you go inside of 30 days till expiration, these start decaying quick. You can see right there, you're only making 25 bucks per day versus 36 per day. So it doesn't decay nearly as fast, does it? So if I want to sell options, typically I want to sell faster, and I actually use the index options for 0 DTE, meaning they expire same day. Okay, and there's other things we can do. As a matter of fact, let me go back out. I always forget the symbols for them because I don't trade them as much as I probably should. But again, going back to the ES, these are the monthly options. And if I go back to contract directory, let me check a different product here. Go back to the ES. And instead of looking at June, we go to today. And you'll notice there are other options being shown here that we can click on. So let's go to this one's expired. That's today's. We go to tomorrow. And under future, we'll zoom in again. You'll see the future that this is being traded on are the S&P 500 futures, ESM25. 88 days left till expiration, $50 per point. Okay, that's the underlying future. But clicking the option, now what happens? This is the E-mini S&P 500 Tuesday weekly options. That option expires tomorrow at the close of the business. 1 day left till expiration. And it is a European style, which means there's no early assignment or exercise, which is kind of cool. So that way I can not have to worry about if I sell options, I don't have to worry about an assignment and having to come up with cash or getting early deliverables. So I could trade these 0 DTEs and it shows me the symbol E4BH25. So I go back out and go to my platform and I can bring up the option chain for tomorrow's ES. Let's see, E4, which means the fourth week. You see you have E1, E2, E3, E4. It was E4B. I wonder if I can just look at all. I don't want to look too many. I just got to scroll through and find the right one, but I can actually look at the options chain. I could probably do it a little bit easier too. There's probably another way to do it. There we go. E4B. Let's see. Let me choose that. No, that's strange. It's not letting me choose it. You go back to ES only. See if it lets me choose different weeks that way. Come on. Like I said, I usually do the monthlies anyway for the futures, but there's opportunities there. Like I said, you can try different things and experiment with it. There we go. ES2. Just curious. I'll just do ES and see what shows. There it is. That's what I was looking for. Oops. After all that. Okay, good. Stay there. ES. And it's 2B right there. So Tuesday, weekly options. Nope. Sorry. ES. It was 4B, not 2B. 4B. Because we're in week 4 of the month. Select. And it's loading. And there are the options. Check it out. So if I want to do 0 DTE options, meaning I want to sell options on that day of expiration, I can create that option spread right now, same way. However, I may want to go back to my chart and choose a different time frame because I'm not going to be looking at daily zones. I'm going to be looking at shorter time frames here. Whoops, minimize. There we go. And go back to my chart and perhaps change this to 60-minute. It might take a few moments here to load. Okay, but I can do the exact same analysis as I was doing before, just on a smaller time frame. To me, it appears that we are going to be able to stay above about 57.75. You can see that right here is a pocket of buying pressure, pushed us up. So perhaps I sell below, and let me write this down because I know I'll forget, 57.75. And again, I'm not saying this is perfect because I'm not doing all my in-depth analysis. So don't go out there and try to copy this. This is just for educational purposes, okay? That's all. Oh, okay. And then for the upside, where are we going to top out? I might have to go back a little bit further in time, which I don't have on here right now. So let's load up some more data. There we go. Just go back enough. And I look left and up to where I believe the prices will not accelerate past. Well, it looks like 5,900 is pretty close. And I just build that spread. Again, going back to my option chain. Now, one of the disadvantages is that I'm using simulated mode. Unfortunately, there's this really cool tool right here called the strategy creation. And I go to templates and I'm looking for condor. Well, no, actually, I'm looking for iron condor. There it is, iron condor. I click on that and look what it's going to do. Sell, buy, sell. It loads up the legs for you. You could fill them out. Again, I'm looking for ES. So I just go down to the correct ones, but went too far. ES, E-mini S&P week 4. Oh, look at that. March 25 and the strike. So I'm going to sell. Let's say, which one did I pick here? Did I pick the calls or puts, or did it say? Oh, I guess I do that next. So I'm going to do a strike. I said, let's say 5,900. We're not going to go above that. And it should be a call. So I click on C for call. So I'm selling that one. Well, I need to buy the option above. So I click on this. Let's see, we'll do option ES. Oops, right here. ES. And it's the EW4. There we are. March 2025. And I just decide how much risk am I willing to take. Let's say I want to do, I don't know, a 5-point spread. So I did 5,900, I'll do 5,905. So I go to that call, 5,905. Just need to scroll down here a bit to find it. And let's see, what do we have? 5910, 5,905. There it is. Boom, select. Now for the other side, the puts. And it's already on a call. Perfect. So again, I go option, click the spyglass, E, and scroll down to EW4. Now on the downside, I want to sell the 5775. So I go to 5775. Actually, I'm on the buy one, so I'll do 5770. Put. Click on that and select. If you make a mistake, it's easy. You just click on the numbers. Watch. If I do this, I'll just pick one. Option, again, EW. Oops, I picked the wrong one. No big deal. Click put, click, and go to 5775. It's pretty easy to click it that way. It's actually faster, I think, than trying to search for the individual one. There's my iron condor. Selling the 5775, buying the 5770, puts, that's below, and then above 5,900, I'm selling and buying the 5,905. Now I can't actually create this because strategy creation is not supported in simulation. Oh well, what I can do though is create a watch list piece. And there it is. It's now on my watch list. Look at how easy that was. Currently, that spread, well, the market's not showing the right numbers. 23, I don't know, it's jumping around. It's probably around 5 something to 6, as you can see. And let's see, I can actually edit the columns and it's showing last, but it's not updated for some reason. It'll probably update. It takes a little time for the data to come in because I got a bunch of different things open right now. Let me close this out, try to speed up the data. Anyway, I can watch this. As you can see, I've got other spreads I was watching that I put in there, but I can watch this spread. Now, if I do want to trade in simulated mode, I can still do it. I just can't do it the easy way, which is creating the simulation and the strategy creation. But I can still do the trade. All I have to do is put in the legs individually. Here it is on my options chain, and I just have to go into each one of these legs. And I can put in limit orders to make sure that I don't pay retail price if I don't want to. We have the bid and the ask prices being shown. Let me make sure. Yeah, there we go. So again, I was looking at the 5775s and 70s. So there's 5775. Make sure I'm on the right one. This is April. No, that's the wrong one. So again, I go to the right one here, W04, week number 4. And this is March 2025, March 25th, 2025. It's showing 2 days because it hasn't considered today's close yet, which technically the markets will close again at 5 p.m. Settlement has already occurred for the 24th, but 25th, they just haven't updated that. It'll say 1 day. As soon as 5 o'clock comes around, markets will shut down until 6, and this is Eastern, by the way, and then they'll reopen and it'll show 1 day. So right here with 70.75 on the puts, I just click. I want to do 1, and I can just make it easy and do market order if I want to. Oh, you know what the price was? That was the individual, and it was showing the combined pricing for the whole spread, I think. Anyway, on the watch list. So right here, I have a couple different choices. I'm going to keep it pretty simple right now. Just to put on the spread, I'm going to do market order, which is not the best thing to do because it's going to buy this wholesale price and sell the retail price. So again, I can click either the bid or the ask. It doesn't matter. I just click 1. And this is the 75 that I want to sell. I'll just do it as a market, but you can see you can even do bracket orders, all sorts of things, OCO, stop loss, all kinds of great stuff. But keep it simple. Sell. Confirm sell. That one's probably gone. So I'm going to click on the 70s and I'll buy one. Again, market. On the next one is 5,900. That was the calls. I go to the 5,900 calls and I'm going to sell. Not getting a lot out of that. And then the 5905 market buy. And now when I go back to my positions and even my order box. Whoops, wrong one. That's the strategy creation. I go to my order management and go to my fills box right here. See as a show. Yep, there they are. And I can see what price I was actually able to get for this. So it's just fill quantity and price. Again, I can zoom in so we can see this better. Oh, won't zoom in on this? Why not? There we go. So what did I get? I got, oh, I can't see the contract. Let me zoom back out again and open this up more so I can see what I got. There we go. That's better. So I sold, oh, come on, locked. There it is. I sold the 5,900 for a quarter. I bought the 5905 for 30 cents. Well, that was pretty dumb. Obviously, I would normally do this with limit orders to get better pricing, and I would actually do this all together. Okay. I also sold the 5775 calls, I'm sorry, puts for 580, and I bought for cheaper. That was smart. I actually made 60 cents on the bull put spread, right? I sold the 75s, bought the 70s. Yeah. So I made 60 cents on that one. Again, it's not 60 cents. It's 60 cents time or 0.6 times 50 bucks. So what did I actually get that for? Normally I'd get this for a credit, not a debit. So it's 0.6 times 50 and it's 30 bucks. Okay. So it's not huge, but what's the probability of profit? Well, one of the things we could take a look at perhaps on those puts is the delta to get an idea of approximation. It's not going to be exact, but an approximation of probability here. So again, looking at the 5775, you can even see my position right here, short and long. And my delta, we have 2089. It's moving, obviously. I'll do 2090 minus 1853. Actually, let's see. That's a put, so I would have negative delta, but I sold it, so that becomes a positive delta. Sorry, I did that wrong. That would actually be adding. Oh, no, it's not. Yeah. And I bought, yeah, so it'd be 2090 minus 1850 basically. So my delta is 2.4, which looking at deltas, that would mean that I have about a 98%, 97.6% probability of making 30 bucks. All right, pretty good. And then how much is my risk? Well, again, the difference between these two is 5 points, right? So my risk is 5, obviously times 50, but we'll get there in a moment. How much did I collect? 0.6. So 5 minus 0.6 times 50 is $220. In order to put on that bull put spread, I only have to come up with the maximum risk, which is 220 bucks. How much am I going to make for this? 30 bucks. Well, what kind of reward is that? 30 divided by 220. That's a 13.5% rate of return by tomorrow afternoon. Not too shabby, right? Wouldn't you like to get 13.5% per day? And all you have to do is the right technical analysis and know how to put in the trades properly. Of course, it's not simple. Well, I'm sorry, it's simple, but it's not easy. Let's put it that way. Simple steps. Do your analysis on the underlying security, identify where prices are not likely to go, and then place the trade accordingly. Looking for the high probability. I'm not making a killing. It's 30 bucks. But 30 bucks is 30 bucks, especially if you only have to use $220 to open up. No, that can't be right. Yeah, $220 was right to open up the position. That was right, the margin. So what if you have more than that? You can do multiple contracts, and that's how it starts to get a lot of fun when it comes to trading. I do this pretty much on a daily basis with the index options, but you can possibly get a little bit extra leverage because one of the things you have to realize about options on futures is futures are leveraged. Options are leveraged. Options on futures are leverage on leverage. What? So there's a potential for greater returns, but you also have to respect the leverage because the leverage is a double-edged sword. It comes with benefits and with risks, of course. Okay. So you definitely need to be a bit careful there. But anyway, unfortunately, like I said before, the calls that I was in right now are not doing so well, but that doesn't matter. Not the ones I just entered, but the ones I was in earlier. You see, this is the different security. This is the one I just put on, the Iron Condor. I can tell because it's E4B. This is the monthly options. And if I wanted to get in and out prior to the expiration, or sorry, prior to the volatility building up for the earnings coming out in April, I could choose options that expire end of March, right? That's the nice thing about this. I can target exactly what I want when it comes to options. I got a little more flexibility. I don't have to trade directionally. I can trade volatility changes. I can trade time decay in this case. where prices are not likely to go. I love that flexibility. That's what I love about options. There's so many things, but if you can think of it, you can do it. There's so many different types of strategies that we're going to go over the next several weeks over between options replay and futures options replay that we'll be able to take advantage of different strategies. And I'll be walking you through how to actually employ those. So coming in our next session, I believe the next few options replay is going to go back to stocks and we're going to be alternating. I think that's the schedule with Jesus. I forget exactly what it was, but we'll be back again with another futures options replay. And I'm going to be placing strategies in certain securities based on where those securities might go and giving you an opportunity to kind of observe how we can utilize the options on futures to affect those particular strategies. So before I go and turn over everything back to Jesus, do we have any questions? Yes, this is recorded. Yes, this will be available for you to watch over and over and over again, which you may want to do. And of course, if you have questions that I can't answer right now, you can go ahead and email education@tradestation.com and we'll get back to you as soon as we can. So any questions before we take off? Believe it or not, I'm actually on time again for once.
By the way, the next futures options replay is May 5th. So we don't alternate, every other
Oh,
week,
okay.
but we're doing the alternation every other week on the options replay. So
That's what
we
it
have
was.
a couple or a few options replay before we do another futures options replay.
Which will give us some good opportunities actually for me to put in several different strategies, and I'll walk you through several different trade opportunities that have been placed. Since we're doing in May as well, I'll also be able to show you a couple of opportunities on earnings that you can
Yeah.
take advantage of without having to choose the individual stocks. So I'm going to write myself a note that I'm going to be doing some straddle opportunities for earnings for our next session in May. Interest in options is simply to hedge open long positions against the weekend against major down gaps, entering on Friday, exiting on Sunday. Oh, that is awesome. Yes. Honestly, there's a couple different ways of doing that. And that is something I definitely am going to be getting into in the options replay session coming up. One of the best ways of hedging, you could actually do it with the futures options too. Take, for instance, if you have a portfolio of, what is it, like Apple, Tesla, I mean, a whole bunch of tech type stocks. What you would want to choose then is options on the NASDAQ, but you have to make sure you weigh it out properly. You can't, I actually did a webinar on this on, not through TradeStation, but I just did a webinar on this on Friday of this last week, how to hedge a portfolio using options. And you could actually create either trade the futures short, but you have to do what's called beta weighting the portfolio. Okay, you can't just take one futures contract or one put on the S&P or one put on the NASDAQ futures and expecting it to hedge yourself perfectly. You have to beta weight your portfolio based on the volatility in your portfolio and then choose your hedge properly. Simply, yes, you could go ahead and buy puts on the NASDAQ to protect your portfolio, but you got to make sure that your stocks are related to that index. If you have stocks that are more tied to the Dow, you got Caterpillar, IBM, things that are in the Dow or more related to that, then perhaps you need to buy puts on the Dow. But yes, you could do weekly options to lower your cost. Problem with doing weekly options, they will be cheap to insure your portfolio over the weekend, but the time decay is so rapid that it may not be worthwhile. So what you could do is perhaps monthly options on the indexes or index futures, either one, index options or index futures options, and you have to beta weight your portfolio to make sure you have the proper hedge. But you could literally hedge 100% of your portfolio for maybe 3 to 4% of the cost of your entire portfolio over the weekend. And you actually get a lot of that back. I say the cost, that would be the margin required, not necessarily the cost. The cost would just be commissions and maybe a few bucks if you take a loss on the insurance. But you'd be making the profits on your portfolio, so you make it up there. Okay. And if your positions are all futures contracts, oh, well, then yeah, the best thing to do if you've got a position on a futures contract and you're worried about the weekend, say for instance, you own corn. Okay, I go to my corn futures here and I'm worried about a decline in the particular contract, create a collar. And that's something we can talk about in the future. I don't have time to do this example right now, but buying a put and selling a call against it, that call that you're selling covers the cost of the put you're buying, that insurance, and you can sometimes do it for free, minus commissions, of course, and fees. Yeah, but that's a way to do it if you have all futures positions. All right.
Okay, I think that pretty much covers it.
Yeah, you're welcome.
All right, Brandon. Well, thank you so much for your time. I think We look forward to the next one in the month of May. We don't have it posted yet, so make sure that you look at events calendar periodically, and once it pops up, just register for it, and we'll send you a reminder the day before and another reminder an hour before the event. But this is our futures options replay, so thank you so much for attending. Also, not only for the futures replay, but check our events calendar. We have a lot of upcoming topics that may interest you, so make sure that you take a look at those. Brandon, again, thank you. Have a wonderful afternoon, everyone. Thank you for being here, and I look forward to seeing you in a future event. Goodbye, everyone.